Hey there, and welcome to BullRush Academy. Today, we're diving into the world of candlestick charts, the very language of price action. If you're looking to build your confidence as a trader, getting a grip on the basics of candlesticks is where you need to start. Every candlestick has its own story to tell. It reveals where price began, how high it climbed, how low it fell, and where it ended up, all captured in one easy-to-read visual. Once you learn to interpret them, you'll start to notice how buyers and sellers interact in real time. Let's break it down a bit. Each candlestick consists of two main parts: the body and the wicks, which are also known as shadows. The body represents the difference between the opening and closing prices. The upper wick shows the highest point the price reached. The lower wick indicates how low it actually dropped. Candles are formed over specific time frames, whether it's 1 minute, 1 hour, or 1 day. Now here's the important part. If a candle closes higher than it opened, it's referred to as a bullish candle, typically shown in green or white. This indicates that the buyers were more dominant than sellers during that time. On the flip side, if it closes lower, it's a bearish candle, often represented in red or black and signaling selling pressure. This simple distinction gives you a quick glimpse into the market's momentum. Let's dive into a real-world example. Picture this. On a 1-hour chart for Euro USD, if price kicks off at 1.4200 and climbs to finish at 1.4300, you're looking at a solid bullish candle and a gain of 100 pips. On the flip side, if it starts at 1.4200 and dips down to 1.4100, that's a strong bearish candle indicating that sellers have taken the reins. Now, let's talk about candle wicks. They add another layer to the story. A long upper wick suggests that the price shot up but couldn't hold its ground as sellers pushed it back down. Conversely, a long lower wick indicates that the price fell but buyers jumped in and pushed it back up. These wicks highlight volatility and can signal potential reversals or false breakouts. What about the size of the body? Well, a long body indicates strong momentum in one direction, while a short body or a candle with a small body and long wicks often points to indecision or a possible pause in the trend. These details are like clues, revealing what traders might be thinking even if they're not saying it out loud. Reading candlesticks is like reading a crowd. Are people feeling confident, nervous, just bidding their time? Each candle can tell you who's calling the shots, the buyers or the sellers, and the insights can give you a real advantage in the market. But keep in mind, context is key. Don't make trades based on a single candle alone. Always take into account the overall trend, support and resistance levels, and trading volume when you're making your decision. And also remember these key points. Candles represent price over a specific time frame. Green or white equals bullish, meaning the price closes higher. Red or black equals bearish, meaning the price closes lower. Bodies show strength or indecision. And lastly, wicks reveal rejection, volatility, or reversals. Grasping the basics of candlesticks is your gateway to mastering technical analysis. It's not just about the charts. It's about understanding the mindset, the movement, and the momentum. The more you practice reading these candles, the more instinctive it will become. Thank you so much for watching BullRush Academy. In our next video, we'll cover candlestick patterns, from dojis to engulfing setups and everything in between. Be sure to subscribe, and as always, trade smart and trade with confidence. I'll see you in the next video.